This is a holy smokes, what the flippity flip flap flop, by crikey, this is some super duper news that was just announced today. This is the beginning of what we've all been talking about. The monetary digital reset is happening this year. We are closer than ever before, and the Federal Reserve announced today that they're going to be speaking about the public. They're going to be telling the public about their digital dollar and their central bank digital currency and what it's going to mean for you and what it's going to mean for me. And the timing of this announcement couldn't be any more strange or any more of a coincidence. Bitcoin has been under attack. It's been under a bombardage of bad news, of FUD, of fear, uncertainty, and doubt. And just as the fear and the uncertainty and the doubt hit its peak, well, Jerome Powell, the Federal Reserve, gets on his pedestal and says, look how terrible Bitcoin is. Look how unstable it is. Look how bad it is. Hey, I got something better, shinier, bigger, the best ever. A central bank digital currency. And looky here, everyone. This announcement came out just as the US Treasury calls for stricter cryptocurrency compliance, with IRS says they pose tax evasion risks. Can you see all the dots starting to connect here? Listen to this. This is why the president's proposal includes additional resources for the IRS to address the growth of cryptocurrency assets. So this is a risk to the financial system. If everyone all of a sudden went into Bitcoin and crypto and left the traditional financial sector and left Wall Street and left the stock market and started pumping all the money in, because the market cap did get up to $2.6 trillion. So it's not a joke anymore. And it was starting to be a risk to the financial system. Well, of course, the government and the global elites had to come in there and squish its progress. Within the context of a new financial accounting report regime, cryptocurrencies and crypto asset exchanges accounts and payment service accounts that accept cryptocurrencies would be covered. As with cash transactions, businesses that receive crypto assets with a fair market value of more than $10,000 would also be reported. And people, we all knew this regulation was coming. It was just a matter of time. But let's get into and listen to the breaking news announcement that Jerome Powell, the Federal Reserve, announced about this new digital monetary reset. And guys, this gave me chills. This is literally like some announcement from some overlord in the middle of battle, because the financial system is failing, it is breaking, and this was his announcement here. Let's have a look.
Today we are in the midst of a technological revolution that is fundamentally changing our world, reshaping how we communicate, access information, and purchase goods and services. As the central bank of the United States, the Federal Reserve is charged with promoting monetary and financial stability and the safety and efficiency of the payment system. In pursuit of these core functions, we have been carefully monitoring and adapting to the technological innovations now transforming the world of payments, finance, and banking.
So see there, he's starting to talk about the technology that is changing everything, that is changing the financial system, and this is the lead up to his announcement of the central bank digital currency.
Automated clearinghouse services made it possible for electronic bill payments to be an alternative to paper checks. In 2019, the Federal Reserve committed to building the FedNow service, which will enable banks to provide real-time or instant payments to their customers around the clock, 365 days a year, benefiting communities across America. Recently, the rise of distributed ledger technology, which offers a new approach to recording ownership of assets, has allowed for the creation of a range of new financial products and services, including cryptocurrencies. To date, cryptocurrencies have not served as a convenient way to make payments, given, among other factors, their swings in value.
Whoa, did you see that there? So this was the lead up. This is what I've been talking about was coming. They're saying it's not a currency, it's not a convenient way to spend money, or it's not a good way as a medium of exchange. And he's also saying it's not a good store of value because of its huge amounts of price drops and huge amounts of volatility. And I was talking about this in my previous video I did yesterday. Could this just be a coordinated attack so the central banks will be like, haha, see, I told you so, I told you Bitcoin sucks. Look at our new great plan to create this new central bank digital currency. Let's keep listening.
Nonetheless, coins tied to the value of the dollar or another currency, known as stablecoins, have emerged as a new way to make payments. These stablecoins aim to use new technologies in a way that has the potential to enhance payments efficiency, speed up settlement flows, and reduce end-user costs. But they may also carry potential risks to those users and to the broader financial system. For example, although the value of a stablecoin may be tied to the value of a dollar, these coins may not come with the same protections as traditional means of payment, such as physical currency or the deposits in your bank account. Therefore, as stablecoins' use increases, so must our attention to the appropriate regulatory and oversight framework. This includes paying attention to private sector payments innovators who are currently not within the traditional regulatory arrangements applied to banks, investment firms, and other financial intermediaries.
So we could be talking about here how Tether is saying that, all these stable coins like Tether, they aren't backed, and if there is a liquidity crisis, your money may not be safe. They may not be able to exchange Tether one for one, because we can see here 49% of Tether is just backed by commercial paper, which is just pretty much junk corporate bonds. So he's saying that it's a risk, and he's saying, look, our digital currency will be backed by real US dollars, and there'll be a lot more regulation and compliance and safety. Well, what's the dollar backed by? It's also backed by nothing. But let's keep watching.
Technological advances also offer new possibilities to central banks, including the Fed. In particular, technology now enables the development and issuance of central bank digital currencies, or CBDCs. A CBDC is a new type of central bank liability issued in digital form. While various structures and technologies might be used, a CBDC could be designed for use by the general public. For the past several years, the Federal Reserve has been exploring the potential benefits and risks of CBDCs from a variety of angles, including through technological research and experimentation. Our key focus is on whether and how a CBDC could improve on an already safe, effective, dynamic, and efficient U.S. domestic payment system. We think it is important that any potential CBDC would serve as a complement to, and not a replacement of, cash and current private sector digital forms of the dollar, such as deposits at commercial banks. The design of a CBDC would raise important monetary policy, financial stability, consumer protection, legal and privacy considerations, and will require careful thought and analysis, including input from the public and elected officials.
So it's a bit funny how he's saying, look, we're going to talk with the public, we're going to get the public's feedback, we want to be transparent with the public and, get their opinion, their thoughts. We won't do it if you don't want to do it. People, it's coming, and they don't care what the public thinks.
To help stimulate broad conversation, the Federal Reserve Board will issue a discussion paper this summer outlining our current thinking on digital payments, with a particular focus on the benefits and risks associated with CBDC in the U.S. context. As part of this process, we will ask for public comment on issues related to payments, financial inclusion, data privacy, and information security. We are committed at the Federal Reserve to hearing a wide range of voices on this important issue before making any decision on whether and how to move forward with a U.S. CBDC, taking account of the broader risks and opportunities it could offer. The paper represents the beginning of what will be a thoughtful and deliberative process. Irrespective of the conclusion we ultimately reach, we expect to play a leading role in developing international standards for CBDCs, engaging actively with central banks in other jurisdictions, as well as regulators and supervisors here in the United States throughout that process. The Federal Reserve remains committed to ensuring that the public has access to a safe, reliable, and secure payment system. Our forthcoming paper on the evolution of digital payments is intended, along with our other work as supervisor, regulator, and payment system operator, to advance the objective of ensuring that the payment system and the economy work for all Americans. We look forward to hearing your thoughts on this important topic.
So everyone, the Federal Reserve this year, they've been saying, look, we're not trying to rush this central bank digital currency. It's not an urgent project. People, it is a high priority from them, because look at this. What you didn't see in the mainstream media about the Federal Reserve's latest minutes, and something I haven't heard anyone else cover is, remember the repo crisis of 2019, and the Federal Reserve just said it was going to temporarily intervene into the markets. This was when the overnight repo rate spiked to about 10%. And for all of those of you that don't know what the repo market is, that is literally the beating heart and the plumbing of the financial system. That is where banks, central banks, hedge funds, money market funds all swap treasuries for dollars, and it's overnight lending. And it's about $1.2 trillion of overnight swaps that happen every day. And so what happened in September of 2019 is this system broke. And so the Federal Reserve said, okay, we'll temporarily just intervene and pump $100 billion, $200 billion, and it broke again in 2020. Well, now in these minutes, the Star says it also considers it could be relevant for policymakers' judgments regarding whether these arrangements should become permanent. That's right, permanent standing facilities. It's funny, all these temporary programs that governments and these central banks make, they always say, don't stress everyone, don't worry, it's just temporary. Just like how ending the gold standard was temporary as well. So what else could these central bank digital currencies mean? Well, it means all your transactions and everything you do will be tracked by these central bank entities. And are you happy with that? I'm definitely not happy with that. And also what it could do is during the next financial crisis or during a recession or any time they need to stimulate the economy, instead of sending you money and you having the power to do whatever you want with that money, The Federal Reserve can say, look, we'll send you a $1,400 stimulus check, but you got to spend it within 3 months, otherwise it expires. So this gives them more control over the economy and over your financial lives. And it also comes with a digital ID. The digital IDs are coming. The Federal Reserve has spoke about this, and that's also something that's very alarming. And people, just more proof that this current financial system is dying and why a digital reset is coming is the M2 money supply. We can see it's gone absolutely parabolic here, and then they discontinued the way they reported it. Also, interest rates are now at zero, so they can't use interest rate tools in its current financial system to boost the economy anymore. And also, here, the Federal Reserve's balance sheet is going completely parabolic because everything in the financial system is dying and they're having to buy up all the garbage. So everyone, we are in for some crazy times ahead. We all knew that these digital currencies were coming, and now they're getting closer and closer. Looks like we may possibly have one this year or early next year, and who knows, maybe even one day we have one global digital currency. And again, just the timing of this, I don't think this is a coincidence at all. With the China FUD, with China banning Bitcoin, with Elon Musk saying he's not going to be accepting his payment, with the globalist renewable energy agenda and saying how bad Bitcoin is, and with the ECB and the IMF also wanting to create central bank digital currencies and the Bank of International Settlements, all this seems like a coordinated attack on Bitcoin so then they can usher in their central bank digital currencies, and then they can say, look, Bitcoin didn't work, ours will. Okay, so with all this craziness, what should we be doing? Well, when everything's going digital, I want to be holding things that are real hard, tangible assets. That's what I think will outperform right now. As people see all this crazy digitalization, people want to go back to real hard assets like land, like precious metals, and like commodities. So everyone, what do you think about these central bank digital currencies? Do you think they're a good thing, or do you think they're a bad thing? Let me know down below. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you updated with the latest that the Federal Reserve is doing, the US economy, the stock market, housing market, and cryptocurrency markets. If you're bored, I'll put up some other videos here. I'll see you there.